Record numbers are refinancing their properties. Let's have a look. Hello everyone, Florian Heiser here, and welcome to another episode of Heiser Says. I have my stein of coffee, and I thought we'd have a look at this Fin Review article discussing just the record numbers of people that are refinancing their property. I can't say it's any surprise. We're all seeing just how low mortgage rates are out there right now. I mean, I make an effort every month or every quarter to just sit on the phone for a good 40 minutes and see what deal I can get from my bank, what discount they can give me. Last time, while I was drafting, I was on the phone with earpiece in for about 40 minutes, and I got 0.04% off my mortgage, which doesn't equate to very much at all, but it's the principle of the thing. It's the principle. And one viewer, I think he was having some trouble with AMP, he got under, I think he got 2.88, around that figure. So, I mean, let us know in the comments if you've managed to get a better deal from your current bank, or if you're shopping around, or if you're actually refinancing, because the cash rate is low. Now's the time to save money. And what do you think people will do with that money? What do you think they'll do? They'll go out and spend it like crazy, or they'll just double down and get rid of their debt as fast as they can? I wonder. I think it's people are just concerned and uncertain. They're going to start saving. Here's a consideration. How many people in the lockdown do you think have saved money and have realized how much money they're wasting? Do you think that will change their behaviors when the market opens up and we start seeing more people get out there and spend and buy and consume? We'll have to see. So residential property buyers are refinancing their properties in record numbers as fixed and variable rates slip to new lows, triggering intense competition among lenders to protect and build market share. More than 26,000 loans, valued around $11.5 billion, were refinanced during March, the highest number since December, and 8% more than last month, according to analysts of government statistics by Finder.com, which monitors rates. Property buyers are chasing record low interest rates from 2.39% for a variable rate loans and 2.09% for fixed. Research company and comparison site CanStar said. Since March, almost 90 lenders have cut rates on at least one of their loans, CanStar analysts show. And the big four banks have cut variable rates, about 31 basis points on average, compared to 26 basis points by other banks and ADIs, authorized deposit-taking institutions, and 28 basis points for non-banks, according to CanStar Group executive Steve Mickenbecker. So there we go. I mean, the cash rate is crazy, insanely low, and it's being represented in, just the borrowing rates. It's costing nothing to borrow money at the moment. Nothing. Do you think Australia will potentially head to negative rates? We'll have to see. Will that encourage people to go out there and borrow? Will you hold onto your mortgage just to get negative rates? I mean, they'll hit you with fees or other ways. They'll have to. Fixed rates had come down from between 53 and 59 basis points, he said. Over recent years, the Big Four have been prepared to allow smaller lenders to lead rates down, but this has not been the case for the last couple of months, with the big guys taking the lead, he said. Graham Cook, Finder's Insights editor, said record numbers refinancing coincided with the start of the lockdown and increased stock market volatility. I was talking to a broker the other day, and he was saying the same thing. It's quietened down a bit. There are a lot of people just rushing, or in trouble, looking to refinance. He was trying to convince people not to take the 6 months repayment break, because some of them didn't seem to understand that your repayments will go up afterwards. They didn't seem to get it. I mean, it's bad news if you need to take it. But even people who didn't need it, they said they'd just take it, just for the sake of it. While the value of homes may well drop in the next year, the mortgages on them will not, Mr. Cook said. And this is the thing, you have people who could be heading into negative equity. And one concern I have had is, and this is one thing I was asking my broker friend, was that what happens if negative equity starts occurring and more people are in trouble with their LVRs? Will the banks start knocking on the doors and insisting people pay more. And he's saying, probably not. The banks will just, plug their ears and go la 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 as long as you keep making repayments. It's when APRA starts approaching the banks and saying, you need to revalue these assets that you have. The values aren't as high as you think. You need to look at that and adjust it. That's when we could start seeing some issues. But the chances of that happening, you'd have to take a really big hit to property values. We're not talking the 10-15% that some people are anticipating. You're talking the 30 to 40% hit in property values. Because it's crazy just how some of these valuations are done by the banks. So Chris Foster Ramsey, a mortgage broker with Foster Ramsey Finance, said many households were attempting to improve their cash flow by using generous cashbacks from refinance deals to pay back break costs on existing fixed rates, then lock into lower rates for 2 to 3 years. For example, ANZ is offering a $4,000 cashback for refinancing home loans of $250,000 or more. Smaller lenders are attempting to shore up existing loan books and build market share with competitive offers. Suncorp will this weekend launch a refinance bonus of up to $3,000 with an additional $1,000 bonus for teachers or emergency health workers. Well, there you go. Might be the way to do it. Get a bit of extra money. But lenders are beginning to introduce tough new terms and conditions covering sources of income, employment, and household expenditure. From Sunday, Westpac Group will lower the amount of non-base income it uses to assess a loan from 80% to 60% of the total. That income includes bonuses, overtime, commissions, interest, and dividend and directors' fees, other than from the borrower's own company. It will also increase the deposit the self-employed need for a loan to 20% of the property lender's assessed value, an increase from between 5 and 10%. There you have it. That's the problem with being self-employed or running your own business. It's tough to get a loan sometimes. So there you have. That will have an impact on it. Citi has suspended new bank loan applications reliant on income from overseas. Just think about that, everyone. We go back to here. This is the Foreign Investment Review Board. This is data that I show all the time. It's showing the increase in building approvals and the beginning of a big spike in property for foreign investors. What do you think? This is only one bank. What do you think that action will have on more projects, more people, more banks jump on board? And, well, I'm just thinking as an architect, it seems some developments entirely dependent on foreign money coming in, foreign income. Just dwell on that for a moment, what that's going to do to property prices and people who are predicting there's nothing wrong with property. Other lenders, such as Teachers Mutual Bank, have stopped financing off-the-plan applications in response to a sharp downturn in demand for apartment investors. They've stopped financing off-the-plan applications. I know these are only small guys, but this is a sign of what's happening, guys. This is a sign. This is going to hit the construction industry. We saw in a previous video new home sales dropped so much. It's interesting. So overseas finance off the plan is off the table as well. And I'm not a fan of off the plan because you don't know what you're getting, guys. Lenders say the new conditions are in response to the impact of the pandemic restrictions on self-employed workers. Categories facing tougher terms are likely to be widened over coming weeks to include those being hit by job losses, such as construction. So, well, there you go. My industry is going to cop it, and construction is going to cop it. A recent survey by the Melbourne Institute showed 3 in 10 Australians were now financially stressed, with the largest proportion of respondents, 44%, in the 18 to 40-year-old age group. 30% of Australians are now financially stressed. And people think it's all going to return in a couple of weeks and we'll get a V-shaped recovery. This here, a third of Australians are having a never again moment now, hopefully. Hopefully. And they'll realize what actions and behaviors they need to take to make sure they're not going to wind up in the same position. This is definitely going to have an impact, guys. So some interesting interesting little tidbits here in this article. Interesting little tidbits. A significant number of people are refinancing to take advantage. Citi stopping and assessing foreign investment. Westpac tightening up their requirements. And no more off-the-plan purchases from the Teachers Bank. Quite interesting, guys. We'll have to see if the Big Four follow through and how much of an impact this will have. I think construction's going to cop it, everyone, particularly the housing and multi-res. It's going to be hard hit. As always, please let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and KuCoin. You can purchase our merch from Heiser Says, used Gold Pass from the Perth Mint, or support us via PayPal. Thanks, have a great weekend, and I'll see you all next time.